So the stock market's just crashed. There's civil unrest all around the world. Warren Buffett dumped a lot of Apple shares. What should you do in this situation? So the stock market decided to start off August with a big market crash, leaving everyone like panicking and stuff like that. But I mean, if you've been investing for even 1 or 2 years, you should be used to this by now. And if you're investing for maybe 3 or 4 years, you should be quite desensitized to it by now. So it seems that this has all been caused by the carry trades, in Japan. And if you don't know what that is, I'll attach a TikTok by someone else in which he explains the situation very eloquently. But I'm not going to go into all those details right now. But basically, Japan increased their interest rates in order to avoid losing too much value to the dollar, which then made a lot of investors who had borrowed to buy assets, some of which could have been stocks or other things, feel the need to dump their shares and go and pay back the money. And it's something like that. You can see the TikTok. Instead of seeing this as a market crash where you have to panic, it's literally a temporary problem, which is just basically giving you a free discount. Like, here, we messed up, we borrowed at this thing and now we have to pay it back, so unfortunately we have to sell our shares. And then guess what, that's where you come in and you can buy them at a discount. I mean, the market anyway needed some correction. I mean, it was on like a rally for like ages now, everything going through the roof, semiconductors, Nvidia, tech, everything was just soaring. So it only makes sense for it to go down a little bit. If you look at the overall trend, it looks pretty fine. And then there was also the news of Warren Buffett selling like 56%, I think, of his Apple holdings in Berkshire Hathaway. But you need to realize that Apple is still Berkshire Hathaway's largest holding, and Apple has grown to such a size, like $2+ trillion or whatever, at which point there isn't much more room for it to grow more than this. I mean, Berkshire Hathaway still has a huge holding in it. They're still probably going to be collecting tons of money in dividends, and they can benefit from Apple being as that sort of cash version of a stock, which they can liquidate some of anytime they need some more cash, due to it being such a stable stock. So you need to remember that you can't always do exactly what Warren Buffett does, because he is running an entire company, not just a person playing with his savings. So I heard that he could have sold this large portion of his Apple shares partly because they have grown so much, in order to realize the gains now before there's a potentially higher corporate tax later on with a new government, and they could use the cash to run their operations in the company, and most importantly to have some cash on the side for new opportunities where they can have more growth than just holding Apple after it's already reached like a peak, sort of. Doesn't necessarily mean that because Apple's reached a peak that it's only going to go down from here. It could even plateau, it could even just have slower growth. But why should they leave so much money in something that's not going to experience that much growth when they could put in something with more growth? And they still do have it as their largest holding. So just keep that in mind before you start panic selling Apple. Of course, you never know. Warren Buffett could know something that we don't know. Maybe he knows that there's going to be some big problem in the future, or like a war or something that is being planned or is in the works, and he is making moves based on that. But we can only work with what we actually know, and everything else is pretty much speculation. But as hard as it can be sometimes, you just need to, first of all, nothing in this video is financial advice and it's for entertainment purposes only. But crashes like this are your opportunity to prove to yourself that you can in fact buy when everyone is fearful, and to dollar cost average and to continuously buy through the highs and lows of the market. And I did that in my portfolio and bought some more stocks on the day that everything fell, and the next day everything was basically going back up. So on like the 1st of August you had like a 6.5% down, 6.5% drop, and then pretty much like in the next couple of days you're back up like another 4%, and it's probably going to be continuing on its way up, hopefully. And even if it's not, doesn't matter, still buying, because in the long run it usually works out, historically speaking. And if it really was to go that bad, that like Apple was to go like bankrupt and Google went bankrupt and Microsoft went bankrupt, these companies are pretty much like carrying the entire S&P 500. If this happened, like America would probably just be like nothing there would be nothing left, and your money in your bank account or under the mattress would probably be worth nothing as well, just like in some other countries where when there's been a war, the money's just been worthless and it's not even worth the paper it's printed on. So that's all for this video. I'm still watching Rolls-Royce and I'm hopefully planning to make another video about that. Hopefully, I'm not sure if I will right now, but hopefully soon. It's still looking good.
It's looking good, bruv. It's looking good.
Anyway, so just stay tuned for more videos and make sure you like, comment and subscribe, share your thoughts, and I'll hopefully see you next week. Bye bye.